Short sellers are facing big losses in 2025, down $138 billion so far this year, according to S3 Partners. But that hasn't stopped hedge funds from filing into bets against some of the market's biggest names, boosting short positions in the Mag 7, with Nvidia and Meta leading the pack. Joining us now to break things down is Ihor Dusaniwsky, S3 Partners Head of Predictive Analytics. Ihor, it's great to see you. And look, the numbers don't lie, right? Hedge funds racking up big losses, shorting some of these Mag 7 names. Why are they leaning in so heavily, especially after such outsized pain?
Yeah, well, hedge funds have to short. I mean, that's really the bottom line. You can't be leveraged unless you're long and short stock. So if you're long a bucket of names, you have to be short in order to get your leverage and become a hedge fund. So one of the names that they short are the Mag 7 stocks because they are the big leaders in the market, and they kind of give them a hedge to certain aspects of the market like tech.
And Nvidia does report earnings later this afternoon.
Yeah.
How active are retail traders and short sellers around big events like earnings, and are shorts doubling down ahead of today's results?
Yeah, we're definitely seeing some increase in short selling in these Mag 7 stocks. Nvidia has over $2.3 billion of new short sales just over the last 30 days. They're the biggest increase in short sales of the Mag 7. Overall, we saw $50 billion of increased short selling over the past 30 days, of which 13 billion was in the Mag 7. So it's like, even though Mag 7 only shorts make up like 11% of the total market of the $1.5 trillion market, they made up 26% of the new short selling in the market.
Yeah, and it's interesting to see increased short interest in big tech while we're simultaneously seeing this market rotation play out. Is there any link between that rotation and the bets we're now seeing against tech?
I think what short sellers are looking at is to see that there is some more rotation out of the market. There'll be a little bit more weakness in the tech sector. So that's why we're seeing some increased short selling in these names. The rotation is real. Smaller cap stocks, mid cap stocks are getting some overperformance. So that, it's got to come from somewhere. There's going to be less demand buying in the big stocks.
And retail traders have driven a lot of this rally. We're seeing more meme-like activity coming back into this market. What does that tell you about the current trading environment? And is it at all similar to past frothy periods like the dot-com bubble or 2021?
We're looking at what we call battleground stocks, where we see a lot of active long buyers and long sellers, hedge funds. If a stock is sitting in a S&P 500 index fund, that's not moving. It's not affecting the stock price. What we like to see is stocks that have a lot of long interest, a lot of short interest. So this way, when the stock price moves up and down, you get an outsized volatility and outside returns. Point in case, Cracker Barrel. Cracker Barrel is one of our battleground stocks. We see $445 million worth of long holdings in active long accounts, hedge funds and retail guys. And we're seeing 269 million of short interest. So you've got a ton of guys on the long side, a ton of guys on the short side. Price moves one way. You've got buying and selling on both sides of the market, driving price crazy.
And how much do some of these narrative catalysts like that logo debate add to the type of volatility when longs and shorts are this balanced?
Yeah, and that's what you need. You need a catalyst, and sometimes this out of bounds catalyst is what really makes the difference. I mean, you have earnings, you have a lot of stuff that's kind of normal in the market. Okay, that's expected. But when you have something like a change in branding, a change in marketing, a mix up with some production lines, that's what really pushes stock prices up and down. And we're seeing stocks in this battleground stock, like some popular names from Tootsie Roll to Whirlpool. GameStop is a battleground stock. You've got some Rivian Automotive, which is a battleground stock. Him and Hers. I mean, there are a lot of names where if something goes wrong in the stock or something goes really well in the stock, you're going to see outside moves up or down.
In your view, is battleground stock equal meme stock? What's the difference there?
It's close. For a meme stock to become a meme stock, it usually has to be a battleground stock. But not every battleground stock is a meme stock. But it's one of the stocks that get on the way to become meme-ish.
Is Cracker Barrel on its way to becoming a meme stock, you think?
It is, and it's hitting everything on both cylinders. It's hitting big long buyers who are actually selling. You got short sellers who are selling even more, driving the stock price down. Now it's going to be interesting. Now they kind of changed their tune. Are we going to see the long buyers jumping back in, short sellers covering because they made their money? So now you're going to see an outsized move up in the stock price because you've got this even long and short interest in the name. So watch out for names like that, like Opendoor Technologies, SuperMicro Computers, another one of those names where it's kind of like in that boxing ring where you don't know who's going to win and lose, but you're going to have some big results.
Yeah, a lot to look out for. Ihor, thank you so much. Really great insights.
Thank you. Take care. Thanks for having me.